Hey everybody. In this video, I'm going to recap my results for 2024 so far, talk about my plans and focus areas for 2025, and then give a detailed list of all my holdings and all of my accounts and my target allocations to each. So going into 2025, it's a good time to reflect and plan ahead for what's coming next. Hopefully this review of my portfolio can help you determine how to structure your own, maybe give you some ideas, and to show that growing an income-focused portfolio is a possible path to financial independence. Welcome to Dividend Stockpile, where we discuss everything dividend and income investing related. So before we begin, I wanted to talk about my background. So I've been investing for 25 years now. I primarily invest in dividend growth stocks, dividend ETFs, income ETFs, and we sell options for income. As you can tell, I'm an income investor, but this is after years of other attempts: growth investing, mutual funds, fear of missing out trades, swing trading, you name it. I found that income investing, which in my mind is using your capital to gain income from your investments, it fits my style and needs. Just like if I was to invest in a local business, I would expect to receive cash flow from it. So it's the same with my investments. Share price growth is an added benefit, but I'm in it for the income. And best, I don't have to sell off my shares to live off of. I can create the ability to pass on the investments to my kids and to charities if I choose to. With the traditional 4% sell off your assets approach, you may have little left over, or you could actually run out of money. My approach to dividends and option sellings will likely allow me to live off just the income and never have to sell down assets. So I started this channel and continue to be open and transparent to show that growth is not the only way, that a focused, long-term approach through income investing can accomplish your financial goals in life as well. And trust me, I did not come from wealth. My parents were middle class, if that. We had very little money. In college, I was completely broke. I survived off of a part-time job and about $4 a day for food. When I left college, I was almost $20,000 in debt. You can see I was broke. The account balances and income that we have today is the result of hard work, saving as much as we could, living very frugally, and being lucky enough to marry a spouse who has the same feelings about money. Now, after 25 years of saving and investing, the benefits are coming in. It does not happen overnight, but it can happen. If you are just starting off, create a system that allows you to have excess in your budget to invest. We treat it like a bill, and I think you might want to as well. Just like you have to pay your electricity bill, pay your investment account. Little amounts invested consistently, conservatively, works wonders over time. So when you have a YouTube channel, you really do put yourself out there. And with that, I like to be as transparent as I can be. That said, I'm not a financial expert. I have no certifications. I'm not a financial advisor, and I truly do not have it all worked out. This is not financial advice. I'm just sharing what has worked for me and what I'm doing on my journey to financial independence. What I do have is a passion for income investing, for teaching financial literacy, and sharing what I've learned with others. So for 2024 so far, the total dividends and interest that we've received on all of our accounts through December 6th is $68,326.51. Additionally, we've sold options, and the options premium we've collected this year is $420,889.88. Now, you might be saying, wow, that's a lot. Why are you even working anymore? You can just retire now. And while we probably could, we're not ready to. And we want to continue to build our accounts over time to produce even more income. So if I had to classify it, we're still in the growth mode. We're still growing our assets. Yes, the income that we received is amazing. It's incredible. We're very thankful and very appreciative, but we're just not ready to rely 100% on our investment income at this time. As we move into 2025, I've been thinking about how I want to approach investing and what my mindset is for this upcoming year. There's three things that I'm going to be focusing on. The first is being conservative. With the market at all-time highs, with a lot of uncertainty about the election and the upcoming economic situations, it's probably prudent to be very conservative in your approach, and that's what I'm going to be doing. So you'll see in our investments, we're focused highly on ETFs, and that's the second thing we're focusing on. We're going to shift away from a lot of individual stocks that we used to have, and we're going to focus mostly on ETFs for the diversification and ease of use that ETFs provide. And the third thing we're really going to be focusing on is on safety. Okay, so for today, we're going to be talking through each of our portfolios, and we have 4 total. Each one has a different goal and a different timeline, and so we're going to talk a little bit about each one of those. So in portfolio 1, this is our options only account, meaning all the money in there is used for option selling. We sell cash secured puts and covered calls to generate income. That income is then reinvested back into the account. We're not using it to live off of right now, so we're continuing to grow our wealth through the income generation. So in this particular account, we're looking to generate about a 30% a year return in premiums alone. So if you break that down, that's a little over 0.5% a week or 2.5% a month. It's a very reasonable, conservative approach to option selling. And so for more information on how to sell options, check out the playlist appearing on the screen above and in the description of the video at the end. So our second portfolio is one of our main dividend growth portfolios. It has 36 holdings. The current yield on that account is 6.07%, and the 5-year dividend growth is 6.02%. Adding them together, it gives us a Chatter rule of 12.09, which is a solid combination of current yield and dividend growth. Also in this account, we do use about 25% of the account that's dedicated to option selling. So we break down this portfolio in a couple of different categories. The first one is dividend ETFs. That currently is geared towards a 25% allocation to the portfolio. Of the dividend ETFs, we have SCHD, the Schwab US Dividend Equity ETF, with a goal of a 20% allocation. And we have REGL, the ProShares S&P Midcap 400 Dividend Aristocrats, and that has a 5% allocation in this account. Moving on to our income ETFs, which is going to be 30% of this portfolio. We have JEPQ, the JP Morgan Nasdaq Equity Premium ETF at 4%, QQQI, the NEOS Nasdaq 100 High Income ETF at 5%, SPYI, the NEOS S&P 500 High Income ETF at 5%, IWMI, which is the NEOS Russell 2000 High Income ETF at 4%, DIVO, the Amplify CWP Enhanced Dividend Income ETF at 4%, and its sister fund QDVO, the Amplify CWP Growth and Income ETF at 4%. And then we have a newer addition to the account, it's BTCI, which is the NEOS Bitcoin High Income, and that's a 1% allocation. In addition to these income ETFs, we will be adding one additional new ETF either in late December or January, and that is an ETF that focuses on REITs. So I'm going to be having a full dedicated video on that particular REIT ETF in the next few weeks. Okay, in this portfolio, we've allocated 5% of our funds to closed-end funds. We have BDJ, which is the BlackRock Enhanced Equity Dividend Closed-end Fund at 2%, BST, the BlackRock Science and Technology Trust Closed-end Fund at 2%, and STK, the Columbia Seligman Premium Tech Growth Closed-end Fund at 1%. And then we move on to our REITs. As you know from previous videos, I'm a big fan of REIT investing. And so 12% of this particular portfolio is divided into our REIT allocation, as you see here, ADC at 2%, Vici Properties at 1.5%, Apple Hospitality at 1.5%, and then Prologis, Alexandria Real Estate, Mid-America Apartments, Equinix, American Homes for Rent, Kite Realty Group, Lamar Advertising, all come in at 1% allocation. Moving on to our individual dividend stocks. As I mentioned at the beginning, we're trying to transition away from individual stocks into more ETFs. And so for the dividend stocks, we only have 8 or so in this account. So we have Broadcom at 2%, Brookfield Asset Management at 3.5%, Brookfield Renewable at 2%, Clearway Energy at 2%, Brookfield Infrastructure Partners at 2%, BlackRock, my number one favorite company, at 3.5%, NextEra Energy Partners at 1%, and ASML at 0.5%. So then we have an other category, and this is more of our growth and bond allocation. So it's about 11.5% of our portfolio, and these particular holdings will change over time. It's really to take advantage of growth in the market. So the first one we have is GEV, which is GE Vernovia, which is the renewable energy offshoot of GE. We have Palantir, we have Berkshire Hathaway, and we have a new ETF, it's TOPT, it's iShares Top 20 US stocks. So it holds the top 20 largest stocks in the United States. And then we have a small allocation to IBIT, which is the iShares Bitcoin Trust. And then for our fixed income or bond allocation, we have BINC, the iShares Flexible Income Active ETF at 5% of our portfolio. Okay, moving on to our third portfolio. This one, again, is a dividend growth portfolio. It's a little bit smaller than the previous one. It only has 21 holdings. Current yield is 5.27% with a 5-year dividend growth of 6%. Gives us a Chatter rule of 11.3, so still very solid. And about 15% of this portfolio is dedicated to options trading, and the rest is dividend growth. So going through the details of this one in particular, our dividend ETFs are about 32% allocation to this portfolio, 27% in SCHD, and 5% in the ProShares S&P 400 REGL. For the income ETFs, we have the same ones, SPYI, QQQI, and DVO. But we also have a small allocation to SVOL, the Simplified Volatility Premium Income ETF. All right, in this account, we have closed-end funds coming in at 4%. We have BST again at 2%. And we have the Reeves Utility Income Closed-end Fund, UTG, at 2% as well. Moving on to our REITs, this is a little bit more focused than our other account. So we only have 3 holdings in our REIT category. First one is ADC, which is Agri Realty. We have AMT, American Tower. And we have VNQ, the Vanguard Real Estate Index ETF. Moving on to individual stocks, we're at 13% allocation in this portfolio to individual stocks. We have AbbVie, Broadcom, Brookfield Asset Management, Microsoft, NextEra Energy Partners, Prudential Financial, and T. Rowe Price. And our others are our bond and our growth picks. It's about 13% of this portfolio. We have TLT, which is iShares 20-year Treasury Bond ETF at 2%, BINC again at 3%, and QQQM, which is a NASDAQ 100 at 8% of this particular portfolio. Okay, moving on to our fourth and final portfolio. This one is broken up into 2 different sections. The first one is for high income, and that portion of the portfolio yields around 8.11%, and the 5-year dividend growth is just under 1%. Has a shadow rule of 9, and currently it only has 8 holdings, but there will be a 9th holding as soon as that new REIT ETF comes out that I was mentioning. So the other part of the portfolio is our dividend growth portion of the portfolio, and that's the same one that's shown on the How to Build a Dividend Growth Portfolio series. So if you want to look more into that one, you can watch those video series. So the current dividend on that one is 2.36% with growth of 9.18%. Gives a chatter rule of 11.54. In addition to the high income and the dividend growth, about 50% of this portfolio is dedicated to options trading. And so for the high income portion of the portfolio, we have QQQI, SPYI, and DVO. We have UTF, which is a Cohen & Steers Infrastructure ETF. We have JEPQ, the JP Morgan Nasdaq Equity Premium ETF. We have BDJ, the BlackRock Enhanced Equity Dividend ETF, and RFI, which is Cohen & Steers Real Estate Investment ETF. And then wrapping that on up, we have VYMI, which is our only international holding. It's a Vanguard International High Dividend Yield ETF. And the dividend growth portion of that portfolio, we have equal weights in GOOGL, which is Alphabet, Lowe's, Costco, Chevron, Federal Agricultural Mortgage Corporation, BlackRock, AbbVie, Lockheed Martin, Air Products and Chemicals, Agri Realty, Microsoft, NextEra Energy, and SCHD. I hope you appreciate the openness of the details of this video. I appreciate you taking the time to watch, like, and subscribe. While you're here, check out the video popping up on the screen where I interviewed the portfolio manager and co-founder of Neos Investments, Troy Cates. Thanks all, and remember, keep stockpiling those dividends.